Amir, hey, did you hear that Yieldstreet is in talks to buy Cadre?
Can I just tell you what shocks me about this whole thing? There was a period in the middle of the odd years where these kids would pop up. This guy who started, Ryan Williams, who started Cadre.
Right.
He graduates from Harvard in 2010. In 2014, he starts Cadre. And he has all these really smart investors giving him tens of millions of dollars. George Soros, Michael Fascitelli, the Kushners. All of these guys are giving this guy millions of dollars, tens of millions of dollars. And this kid had never done a real estate transaction in his life before. I mean, I'm guessing, but from college to when he started this, it was only 4 years. He doesn't have the sense, I would think he doesn't have the sense to be able to handle, to be able to understand what it takes to run a business at that scale, especially involving real estate. I mean, real estate is so nuanced, especially at this size where you're dealing with institutional investors and individual investors and so on. And he managed to get the faith of all of these folks that he's going to be able to do hundreds of millions of dollars in revenues. And now it's 9 years later and we're here. And I was never surprised by that. And I feel like a lot of these people invest into these things because they really want to believe in it. And they also want to be part of the whole the sort of the tech advancement of, hey, we were a part of this early on, but I think everybody's sort of paying a price for it.
Well, let's distill a couple of concepts because I completely agree. So number one, the legendary founder, right? He had the credentials. It's all there. Two, you want to be where the big capital is going. And if he was able to get Soros, Kushner to do it, you pile on in. Does it mean that the concept will actually work? Yeah. The answer is not necessarily, right? Because real estate, like you said, is a nuanced business. You have to have a certain amount of savvy in order to get to the deal. It's not just because you have the capital, can you actually get the deal?
Right.
So he created like a marketplace. He's saying institutional capital, find the deals, will be able to execute better than the relationship.
But if you're not in that process, if you're not Doug Harmon, who says, if Doug Harmon said, hey guys, I want to start Cadre, I would be like, yes, there must be something here because this guy deals within this business. He's done this. He's successful at it. But some kid who's never had the experience and who doesn't understand the nuances of some of these deals, and for all these people to blindly give him money, blindly or not, at the end of the day, all of those investors have lost money. I feel like that's a common story with a lot of these tech companies.
Domain expertise. Everyone forgot. In real estate, you need domain expertise coupled with that technology, and that should lead to the win. Here is just having the technology, having some credibility and capital, but missing domain expertise.
Yeah. I mean, you need that, and I feel like they were lacking that.
Now, I just want to tell you, Yieldstreet, on the other hand, domain expertise, same type of technology, still getting deals done, making deals, because the people behind that had the domain expertise.
But let me tell you something else. So with Cadre, they had expected that by 2025, they're going to do $400 million in revenue. I mean, I think these sort of projections mean nothing in general, but the fact that was what they were basing their, the investments that were coming in, the venture money that was coming in, was based on the fact that they're going to pull in $400 million in revenues. And SoftBank was about to go in and invest with them at a $2 billion valuation. And now we're seeing that they're going to be sold for roughly around $100 million maybe, which I would think it would set their revenues at maybe $20 million, which is far off of what they expected. And this is a company 9 years into it. I don't know how much money is spent on the operations and everything else that they've done.
High octane capital, way too much variability and complexity in what you're doing to make these assumptions, but people were buying into it. And now when the reality comes crashing down, you're seeing a real valuation. Are you tech or are you real estate? And it seems they're working off they were real estate.
Yeah.